Welcome to the panel on foundations. Thank you. We're pleased to have this session, this special panel on to have a dialogue on foundations, particularly on the perspectives on financial inclusion. You have been receiving a number of views and analysis about the status of financial inclusion in Latin America and the Caribbean. And there is an important context that has been set with regards to this reality, and the foundations play an important role. Not only historically, they have been active in Latin America, working on a range of projects and issues relating to economic development, and one of them has been financial inclusion. So we are pleased to have three representatives of very important foundations with operations in Latin America and the Caribbean. As a point of departure, what we want to do is to basically have an understanding of what is the vision, what is the commitment and the practice of foundations with regards to the subject of financial inclusion. To set the frame of this conversation, one of the central issues that we see on a regular basis about Latin America is that despite the continued growth that Latin America has been having at the individual level, there are a range of challenges that are being faced by many of our societies in the respective countries. One of them, for example, is the problem of financial inclusion. Less than 35% of Latin Americans have access to a bank account. Now, that's just your baseline when you consider that there are other aspects that account into the issue of financial inclusion, and its relevance in itself. It's important because it gives you the means, the most fundamental means for financial independence, which in itself is one of the key aspects of human prosperity and human development. So we do see a number of challenges with regards to financial inclusion in most of our societies. A small percentage of people are able to save, a smaller percentage are able to borrow money, and when it comes to managing your finances, there is very poor management. We have been working in several Latin American countries, and for the most part, 80% of people are not able to manage their funds, don't have good financial skills, even though about 60% of them, in some cases, in several societies, are able to save money. So we see that there is a deficit on financial inclusion. We see also that there are a number of problems relating to that. One of them is that there are barriers to entry. In several countries, for example, the banking system sometimes does not allow people into the financial system from the very basic account opening because they don't have a fixed landline, for example, which is a typical problem in several countries. Or they don't explain what are the requisites, the entire requisites to open a bank account. Sometimes you're turned down because you brought a piece of paper that says that this is your letter of reference from someone, but it was not printed properly. So there are a number of barriers to entry. Some of them may be mundane, others are more substantive, that make it difficult for people to get into the banking system. Sometimes there are regulatory issues regarding know your customer rules, and sometimes there is a problem of financial management, financial literacy among people, as well as other challenges that relate to financial access. Payment infrastructures, for example, are still yet to be fully developed in Latin America in several countries, and that poses a constraint about people as one of the point of entry into financial inclusion, the payment system that then allows you to get into the financial depository context. So with that in mind, we do see that our societies are still financially vulnerable, and foundations have been active in trying to identify ways to operate, ways to make changes into the context of economic development and finances in these societies. So what are the ways in which the foundations implicate themselves in financial inclusion? Here we have a panel of three distinguished participants. We have Janice Butler from the JP Chase Foundation that is representing the foundation to talk about some of their initiatives. We have on my left Monica Chavez from MasterCard Foundation and Dennis White from MetLife Foundation. And what we want to do is to engage the participants from the different foundations to give us their views, their vision, and their level of engagement with regard to these issues. And one point of departure, one question is, to me, as a start, as a baseline, is basically to get a sense of how do the foundations from your respective institutions view are the challenges and the priorities on financial inclusion. That is, you have identified this to be a priority. So if it's a priority, why is it that it's so? And how do you define it? How do you position yourself in that context? So I don't know who wants to start.
I'm happy to start. And
sure.
Just as a point of clarification, I'm actually a senior program officer at the MasterCard Center for Inclusive Growth. So I'm actually not the MasterCard Foundation. Now, I'm proud to say that we endowed the MasterCard Foundation a number of years ago at about $500 million, and the foundation is now at about $7 billion in assets. So we're really very proud at MasterCard worldwide to have provided that gift to the foundation to allow them to be as successful and as impactful as they are today. Now, the MasterCard Center for Inclusive Growth is very recently started wholly owned subsidiary of MasterCard. And essentially, there's two specific areas that are part of that MasterCard Center for Inclusive Growth, and that's academic research and global philanthropy. And from an academic research perspective, the interest there is really to get timely and relevant information around financial inclusion, and as MasterCard understands that financial inclusion is really the challenge of our time, and we really need to get some intellectual capital to support the understanding of what financial inclusion and inclusive growth really means. And so MasterCard is really committed to creating, curating, and convening this intellectual capital to help drive the momentum and the scalability of financial inclusion forward. From a global philanthropy perspective, which is the area that I work in, and I manage the Americas, very happy to be able to support Latin American, given that I'm Colombian, and so I'm extremely passionate about ensuring that we drive financial inclusion in that country and across Latin America. So global philanthropy focuses on financial inclusion through entrepreneurship. And the reason that we focus on entrepreneurship is, first of all, from a financial inclusion perspective, there's approximately 200 million small business owners that still do not have access to the key financial products and services they need to be successful. The other reason for that is because entrepreneurs are innovative. And MasterCard is really interested and focused, as a personal mission and driver of MasterCard, is around innovation in technology. And so it's very core to our mission and our focus at MasterCard that we really invest in our entrepreneurs. And we want to invest in our entrepreneurs not only at the time when they're starting and developing and emerging their business and at the growth stage, but we want to invest in our entrepreneurs when they're young as well. So we really want to engage and support their entrepreneurial spirit. And we do that by supporting education initiatives. And we work with partners such as NIFTY, the Network for Teaching Entrepreneurship, which is a global organization, to really begin to teach students how to be innovative and how to drive to success so they can start their own business, continue on to post-secondary education, and then hopefully at some point start their own business and become economically independent. We also have a great deal of interest, as I mentioned earlier, in really supporting the small business owner, both in starting up, providing them access to capital, and ensuring that they have the technical assistance that they need to support them, but also in enhancing businesses and in growing those businesses over the course of time. I don't want to take up everybody's time. I can go on, but we'll stop there.
Yeah, I can add on to that because some of our programs really complement that or build upon that too. So MetLife, I am with the MetLife Foundation, although employed by MetLife, and it is a pleasure to be here today too. Latin America is a very important market for MetLife and a growing market for MetLife. And in many ways, we're a little bit new to financial inclusion, the foundation, but in many ways MetLife is really financial inclusion is part of its DNA and part of its history, going back over 100 years when we sold industrial life policies here in the United States for a nickel a week, and agents went door to door to working families' homes to provide insurance. So in a way, that's really part of what we had done over the years. So coming back kind of full circle, looking at financial inclusion, it's a newer area that we launched last year. I'll go of course, across three different pillars, as we're calling them. One is a financial capability pillar, which echoes the education piece, but really making sure that low-income families, low-income individuals have the financial capability to use financial products like savings, credit, and micro or insurance in some cases. And that's our second pillar, this access to products and services. And the third that builds upon what you were speaking about is really this, it's not quite as formalized as yours on the academic side, but really finding what works, sharing the good ideas, learning from our activities, and sharing that with the nonprofit field, the for-profit field too, because maybe we'll get to that later, how important for-profit institutions are in financial inclusion too, to reach many more people than nonprofit organizations possibly could. So this is a new area for us, but again, an area that's part of MetLife's history. I've been in and out for the last 2 days, and a lot of our partners have been here, especially the ones from the United States yesterday, speaking about their work in financial inclusion, whether it's the credit union organization, the financial clinic, and a few others. So here we have a strong network of organizations that we've worked with, and as we've moved into financial inclusion, we've built upon this long history of working in the nonprofit field. The reason it's great to be here is that we are new in expanding our corporate citizenship work into Latin America, and the opportunity to hear some of the great activities going on and to meet some of the individuals and countries and NGOs and leaders who are working it is really helpful. So we continue the dialogue.
Thank you. Yeah, I think the J.P. Morgan Chase Foundation is in a very similar place in that we recently identified financial capability as an area where we really want to drill down and put some strategic dollars to work. If I could back up for just a second, I would really characterize J.P. Morgan Chase's foundation work as being all about economic growth. And so financial capability is just one thing that we do. We launched a new initiative recently around new skills at work, helping employers and those that are training the unemployed find each other and make sure that we're really helping to close the skill gap. We're thinking about how we support small businesses here in the U.S. We also are thinking about how we help community change agents like CDFIs do their work. But our foundation is global. We put out $200 million a year in across these 4 broad areas. And our financial capability work is global, and we will be making additional investments next year. So I agree, this is a really great opportunity really for us to meet so many people and learn from the people in this room what's really important in your countries and how a corporate leader like J.P. Morgan Chase can really help and support initiatives that you have going on in your country. I was sharing earlier, financial capability is a new word even in English, and traditionally banks have focused on financial literacy or financial education, and the evolution of that is into this new field of financial capability. And for us, what that means is that we're really focused on the skills, behaviors, and ability that people have to manage not only their short-term financial situations, sort of their day-to-day, but really build towards that long-term financial security through building assets. And there's good reason why we do this. We know that financial isolation is really at the core of the barriers to economic mobility. And when I think about everything else the bank does to promote economic growth, at the end of the day, if people are not financially secure and they can't buy those goods and products or services, they can't save, they can't borrow, none of the rest of it goes. We know that when people are included financially, when they're on their path to economic growth, that's better for local economies, it's better for businesses, it's reduced strain on governments, and really helps support the fabric of communities. So we see this also as just a fundamental issue to economic growth and greater economic opportunities. We are thinking about this work really in two ways. One is that we're thinking about how we scale the most innovative and promising solutions and how we create a network of providers here in the US, but also in the other countries that we work, that really can meet the needs of underserved consumers. And I just wanted to, as we start on the discussion, something that was said earlier, I think, Manuel, is really interesting. You know, when I often talk about underserved consumers here in the US, very low-income families are immigrants who remit millions and millions of dollars into Latin American countries and into countries all around the world. Here in the US, a lot of those families are earning very low wages, and yet they find the ability to still remit a couple $100 a month back to their families in their home country. That speaks to a certain amount of financial savvy. And what we want to do around financial capability is help identify what works for that customer that takes the savvy that they already have and creates products that really work for them, and help empower an ecosystem of providers that are going to work for that customer. Right now, we often have situations where products and services are designed for somebody else, and then they're sort of forced on the underserved customer, and that's often why they don't work. And then the other piece of what we are thinking about is how we help also create a network of NGOs or nonprofit organizations that provide the sort of wraparound services that really help consumers understand their options and is an ongoing resource to them. We know that in order to be effective, financial education is not a one-shot deal. It has to be ongoing, and it has to be relevant to whatever's going on in that consumer's life.
Thank you, Janice. I think that you raised a number of issues. We're working on right now on a large-scale project that deals with what is called scaling up. And the idea is, okay, so much has been done at the pilot level. You see that this works, that works, but at the end of the day, there's been significant investment in a range of things, but there is no economics of scaling economic development. And so that now is becoming an urgent matter, a matter of relevance for a number of foundations and development institutions. You also bring up the entrepreneurship part. I think that's another relevant aspect. You know, we always talk about entrepreneurial development in Latin America. I still am not completely convinced that that's the approach to go in a region where the rate of informality are above 60%. Yet entrepreneurship has been demonstrated at the same time to be central to economic growth. Mm-hmm. But the majority of small and micro enterprises in Latin America only have less than 10% of total credit portfolio available. So you have two sort of conundrums here. You also mentioned another important issue. You know, you're talking about migrants. Of course, you're touching onto my field. But you know, what is relevant about this is that Latin America is a region that has 40 million people living abroad, in a region that, you know, is over 600 million population. But this is the interesting thing, that between 30 to 60% of households in Latin America have a relative living abroad who are sending this $60 or more billion in remittances. How many of you are from Jamaica? I see a colleague from Jamaica, Haiti, Guatemala. Well, you know, these three countries in particular have between 700,000 to 1.2 million people living abroad. We talk about Peru is about 2 million people, and so on and so forth. The issue is that there are transnational needs going on too. And so my question will be now, how would you see are your current projects fitting to the realities of Latin America? And how would you go about to, perhaps if you can illustrate some of those projects as a means to see, how things are working right now. I understand there is some component to research, and that's also very important. So if you can give us a sense of that within the context of the realities of Latin America. We're still a region that is unskilled, uneducated, informal, and underpaid. And those are the realities of Latin America. So if we can volunteer, or I volunteer you?
No, it's fine. I'll start. And I'll start with a statistic that I've heard a number of times here over the course of today, and I'm sure it was used yesterday as well. But there are 2.5 billion people that are still without access to financial services. And essentially what that means is that there's a very large population that does not have access to some of the basic services that we take for granted. So access to a checking and savings account, being able to save your money in a safe, secure manner. Access to insurance to be able to support you for unforeseen circumstances. Access to credit and borrowing money and taking out a loan to really help you with some of the basics of life. If you take it a step further and you take that 2.5 billion and you think about youth, 40% of that 2.5 billion number is reflective of youth that does not have access to financial services. And 50% of that 2.5 billion number are women. So that's a considerably large number of the population are youth and women that do not have access to financial products and services. If you think about the emerging markets, there is a very small portion of the population that has access to banking services. And in Latin America, I believe it's about 60% that has access to that. And the reality is that the banking infrastructure is not very well developed in those emerging markets. So if you take a step back then and think about, from a MasterCard perspective, what's our investment in financial inclusion? We're really focused, as I mentioned earlier, in youth and women, because that segment really is the segment that's most underserved. And so in Latin America, what we're really trying to do is understand what the opportunity and need is in the market. And then as it relates to really focusing on that underserved community, we partner with governments, with NGOs, with multilateral organizations, and with the private sector. And we really focus on public-private partnerships to really invest in those communities to make a difference.
Can you give me an example of a partnership?
Sure, absolutely. We just recently announced a partnership with the IDB. Mm-hmm. It's a 5-year partnership that really is really focused on transparency, right? So the engagement is to be able to bring electronic commerce across Latin America, mm-hmm. And so we're leveraging IDB as the multilateral organization that really understands local community needs and needs across Latin America. And the reality is that Latin American countries across Latin American countries, the issues are very similar. And so to have an organization like IDB that can help us in the interplay and that will be open and transparent to us, and that we can be open and transparent to them, to really begin to create innovative payment products, services, and solutions that will impact the Latin American market is key.
Thank you.
Maybe I just come back a little bit about the scalability comment that was made too. So our work in Latin America is new, it's developing. We're more active in Mexico than in other regions, although Chile and Brazil are growing markets for us as we get more involved and find partners. But on the scalability issue too, I mean, we're two foundations and one non-foundation, but a very big sister foundation or related foundation. But on the scalability issue too, I mean, when we think about the ways that we operate to achieve scale, I mean, I think we all mentioned scale, and you've heard scale commented upon. So we have organizations that we work with, nonprofit organizations, but I think there's a realization that that's not going to solve the problem, that they're just not the proper reach, the proper breadth of activities. So, the partnering with, as foundations, we typically go to nonprofits, but we're experimenting more with working with for-profit entities, and really to reach more. So whether it's a bank, whether it's a for-profit MFI, and our grantee too doesn't necessarily have to be a nonprofit organization. So if we're working with a consulting firm who is a double bottom line consulting firm, so we're doing some things outside of Latin America, unfortunately, hope we can bring them into Latin America, but with Bankable Frontiers or Global Banking Alliance for Women, to make sure that mainstream institutions have access to many, many more people than the small nonprofit world ever will, are developing services, or providing them in an appropriate way, a convenient way, an affordable way. So I think as a strategy, that was mentioned, that strategy of scalability and reaching many people, that I think we need to, and I think we and our partners, because we work through partners. I mean, my staff is very small. We have financial resources, unfortunately not as much as JP Morgan, but we've committed $50 million a year to do this work, but we have a small staff, so we need partners, and that's people in this room, but we need partners who can develop programs that are both public-private, but also bringing in a range of institutions, a range of organizations, in order to have much greater reach and accessibility to low-income people.
And we've been thinking very similarly in terms of approach, of really thinking about what we can do with social entrepreneurs, the kind of those companies that are market-based, are market-driven, so they're going to have the ability to get to scale, but also with a public mission or public eye in mind. And we think that that's really important to really hitting that scale number. And I think I agree that while we still see a very critical role for a lot of our nonprofit partners, in particular in service to the most vulnerable and the very lowest of income, but it's so critical to think about how to create this ecosystem, a whole network of providers that will be out there for a wide range of needs. And that's not going to happen just through the nonprofit sector. We really need mission-driven, for-profit companies that are coming in to do that. Another way that we're thinking about scale that I think is probably common across all of us on the panel is really thinking about the tech-enabled solutions and what sort of technology makes sense, which is another sort of component of what we do here in the US, and we will take into our grant making in Latin America as well, as making sure that what we do is culturally competent and culturally relevant. So on we think of technology then in two ways. Both the infrastructure that helps make a product or a system go and be delivered in an effective and efficient way, lowers the cost to serve a particular consumer. And then we also think about the consumer-facing technology. The rise in mobile is just breaking down barriers all over the place, whether that's just through information and alerts, through text capability, or actually making internet more accessible in a low-cost way. So we think about technology on both sides, both the infrastructure side as well as the consumer-facing side. And as we think about then how to really, Manuel, to get back to your point around making sure that we're addressing realities on the ground, anything that we do, and I think this is the sentiment of the panel, using that user-centered design to make sure that we're really meeting families where they're at, and we're designing a service that responds directly to those needs. We're not force-fitting something built elsewhere or for a different customer. That's a lot of what's been tried, and it hasn't really worked.
Well, I think it's encouraging to hear that there is an interest to work more with the private sector. Because there are plenty of advantages to work with non-profit sectors, there's no question about it. But definitely engaging with private sector institutions, sometimes you can reach the economies of scale you are challenged with the non-profit sector in many cases. But that puts in perspective the whole idea and the rhetoric on public and private partnerships. And in that realm, I mean, we have basically a group of individuals here representing governments. And I want to open the floor for questions at this point. I mean, one issue I think is, to me, of importance is, we're talking about partnerships, for example, we're talking about projects. How will the public sector, ministries of finance, central banks, etc., think of themselves as being a partner with a foundation like MetLife, JP Morgan, etc., to basically enhance financial capability or increase financial inclusion? So please welcome your questions. We have one question here, and let me take 2-3 questions right now. I see one hand up. The one more hand over there, and one hand at the last end. Let's cut those hands and bring them over.
Good afternoon. Good afternoon, Julia Hyatt from Jamaica. My question is, it's interesting to note the references by all to Latin America, but there was no particular reference to the Caribbean. There are quite a few of us here from that sub-region. So my question relates to, is there any interest by any of your foundations or the center in the Caribbean, particularly the English-speaking Caribbean? If you are already doing something there, could you just highlight that for us? Thank you very much.
Thank you. That's a very good point. We sometimes we think of the big countries, and I don't want to diminish the size of Brazil, but there are many challenges of financial inclusion in small countries. Jamaica, for example, has a high rate of bancarization, but the use of savings, the savings usage is not as active as it is in other countries. And then we have countries like Guyana, for example, or Haiti, where the challenges are quite significant, even though the countries are small.
Yeah.
You have even smaller countries. Yes, we have.
Over there.
Exactly. So there is one question over there, please.
Oh, are we answering this question?
Yeah, let's take the 3 questions and then let's move.
Okay, hi. My name is Richard Weisskopf, and I'm a professor at the University of Miami. So I have a question on this. One of you mentioned academic research. Does that include the United States? The second is, someone mentioned about almost these giant grants like to the IDB. But do you give grants to smaller organizations in the United States? Because a number of foundations say we only work in third world countries. So I work with farm workers and low-income workers in South Florida, where we're transplanting a Peruvian model, which is a peer-managed savings and loan circles on a small scale, but there are a number of them. There are 1,000 of this model in the UNICAS in Peru.
That's a good question. In this transnational family context is useful. There was another hand raised at the end. Okay, there is over there. Sorry.
My name is Valerie Lorena. I'm with the Young Americas Business Trust. Our organization focuses on supporting young entrepreneurs in Latin America and the Caribbean, 30 countries, over 3,000 entrepreneurs every year. My question is specifically for Monica. Thank you for sharing the expertise of MasterCard in regards of supporting young entrepreneurs. But I would like to, if possible, for you to elaborate more on what works, what doesn't work, and why, when you partner with regional institutions, regional organizations, in implementing the programs.
Thank you. I'm going to take the other person that was raising their hand on this side. Was you, right? Yes. Yes. Go ahead, so we don't forget you.
Good morning. Good afternoon. Sharon Rattan from St. Kitts Nevis. I just wanted to make an observation from the previous discussion we had. because you were pointing out countries such as Jamaica, Guyana. Those are very large countries in relation to where we are from, which is just a tiny twin island state, 68 square miles for St. Kitts, 36 for Nevis. But I wanted to point out that very often, yes, we may seem small, but one has to really understand the context of the country. Because in St. Kitts, Nevis, the penetration of access to the internet is very high. So that may be one factor which can facilitate more mobile banking, etc. And also to point out that we have the opportunity to look at where the country's economic growth is going, the direction and the trending, so that you can consider some more partnerships in that area. So do not discount us because of our small, very small size. There may be many opportunities.
Very good point. I mean, this is not just simply about size, but about the individual. I'm from Nicaragua, and there was this Nicaraguan poet, Rubén Darío, who says, si la patria es pequeña, uno grande la sueña. If your country is tiny, you dream it big. So we are on for that. So do you want to start, Jenny?
Sure. So I thank you for the comments. I think it's important as we talk about economic inclusion to remind the panel that we're using inclusive language as we talk about our initiatives. So thank you for that. I mean, we, having just launched our financial capability, or actually not even launched, the launch is coming in a couple of weeks. So if I'm being vague, it's to preserve my press moment, or else my media people will find out and I'll be in trouble that I leaked the news early. But you know, we're certainly interested in understanding globally what's working and how we spread those best practices really anywhere we can. And I think there's a lot of lessons to be learned in small countries as there are in large countries. I did want to come to the question on peer lending circles, because I appreciate that question. We have a close partnership with a group that probably maybe some people in the room are familiar with, Mission Asset Fund, who's had taken the peer lending circle model in San Francisco, really formalized something that has been happening in other countries for a long time, and informally in the United States amongst immigrants for a long time, where they really, for those of you probably have versions of this in your own countries, where a group of people get together and throw in on a monthly basis and take turns taking the pot. So they're effectively lending to one another. If you're first in, it feels like a loan. If you're last in, it feels like savings. But yes. Susu, keys, cestas, tandas. Yes, there's a name for them in every country. And Jose Quinones, who if you haven't met, many of you should. He's done a great job with this. His innovation here in the U.S. has been to report that activity to the credit bureau, obtain promissory notes and report to the credit bureau. So he's been able to, I think it's a great example of meeting families where they are, taking a system that's very familiar and adding just the right amount of formalization to that to help those families start to build a credit history, kind of step them into the mainstream financial system. So to your question of do we support those kind of efforts, we do. We've made a significant investment in Mission Asset Fund to help them grow their model, and I think also are interested, to your other point, of wherever we see good ideas happening, how can we help translate those learnings to other places. Again, this was something that I think is popular and formal in other countries, and we've done a lot of educating on our side. I can certainly tell you, introducing the concept of peer lending circles to a JP Morgan Chase has led to more than one interesting conversation. But it's a way for us to make sure that good service is available to a customer that is not being served by a JP Morgan, who's not walking into our branches. But that infrastructure, that nonprofit infrastructure, is very important for reaching exactly those households.
So I'll be very deliberate about asking each one of these questions. So the first questions are, what are we doing with the Caribbean? And the reality is that we partner with a number of global nonprofit and NGO organizations. And we provide funding for direct service activities in a number of markets, but we also help support and develop the capacity and infrastructure of these nonprofits and NGOs to deliver programs across all of their markets. So we have relationships with organizations, as I mentioned, like NIFTY, which is a global organization, and also a member of the OAS, Trust for the Americas. And these organizations, they deliver programming to the Caribbean as well. And so I hope this doesn't sound like a cop-out, but the reality is that from the MasterCard Center for Inclusive Growth perspective, what we want to do is we want to help institutions that are global in nature, so that we not only focus on the local markets where you live and that there's an understanding in your particular local needs, but that we also understand what the issues are on a global level, and we're able to help support the organization to tackle those issues at that level as well.
Yeah, I thought you were going to go through each one, but
yeah,
go ahead. Go
is that
ahead.
okay?
Yeah, go ahead. Absolutely.
This gentleman are on the U.S. models. So the reality is that we're always looking to understand models that actually are birthed outside of the U.S. and bring them to the U.S., right? Because we understand that there's a lot of innovation happening outside of the U.S. that can really resonate. We work again with national and global organizations. We're currently, and this hasn't been announced yet, but we're working with Habitat for Humanity International to really develop a program called Work Live, where we're supporting Habitat in the development of not only affordable housing, but enabling them to outfit those homes for micro and small business owners. We also work with a number of different research organizations to really understand what are the key gaps in terms of micro and small business owners in the U.S. So we're working for the Center for Enterprise Development and really understanding they're a key driver in the U.S. around asset building. And we understand, again, as I mentioned, that entrepreneurs are key cog in the wheel to ensure economic success in the U.S. So, we focus a number of different research efforts here in the U.S., but we also really want to leverage the understanding of different programs and services and their impact overseas and bring them to the U.S. as well. And last question that was posed in the back in terms of young entrepreneurs and the programs and what works and doesn't work. Again, leveraging our relationship with Trust for the Americas, we're currently funding them in a number of different markets in Brazil, in Mexico, and in Colombia to drive their Poeta centers. And what really, really works is being able to leverage organizations that are tied to the federal and local government. So for instance, in Mexico, Trust is delivering programs with Instituto Mexicano and Fundación A. Those are organizations that are grounded in Mexico. These are local organizations that really understand what are the particular needs in the market, the needs of their constituents, and how you can really grow and develop a program within the market that will be successful and that will be relevant to that market and that'll be sustainable and scalable. All key words that you want to focus on. I think one of the issues is that foundations and of the like really are done with counting widgets, right? And so talking about the number of people that go through a particular program, that's not what we're looking for. We're really looking to understand what's the result, what's the impact, what's the behavioral change that you're actually making in the lives of these individuals as they run a course of an entrepreneurial program that's being funded through MasterCard. So I think there's still some work that needs to be done there in order to get us to that result so that we really understand what's the impact that we're making around financial inclusion and inclusive growth.
Yeah, I'll build on that again. I mean, this is the outcome versus output discussion that I think we all have in the foundation world, especially when you get into financial education or financial literacy, that you present these materials, people go through this course or they read this material, or, you know, you've done 10,000 brochures, but, you know, so there's the output, right? And we all measure output, but what's the outcome? Does it change behavior? Are there then products and services available for that individual once they learn about a bank account or learn about credit? Can they then immediately move and get that access to that product or that service? So you need to obviously connect the two. On the entrepreneur question, I think, you know, we all fund those activities. We fund a lot of entrepreneurial activities with junior achievement around the globe. And, you know, what is the ultimate outcome of that, or output of that training on a young person's life? It's not a bad thing, but is it really moving the financial inclusion needle or creating income or a livelihood by going through an entrepreneurial training? So there's a lot of work to be done in that area. And just again, trying to answer specifically the questions that were asked, because they were asked. You know, so the Caribbean, we don't work in the Caribbean. I think, you know, I mentioned our three kind of areas of activity. One is the sharing of knowledge of the successes that we see in other parts of the globe. And you know, again, maybe a little bit of a cop-out, but that's how we would work, you know, with geographic areas that are not in our markets. I think, you know, the reality of a lot of corporate foundations is that they're working in markets where their markets are, you know, where they're selling product and where their people are, and you know, that's different than a private foundation who may have a different geographic perspective. I mean, you know, for us, our main markets are the U.S., Japan, Mexico, Chile, and those. You wouldn't really put those four markets together unless it was because that's where the business is being done. You wouldn't do it from a from a philanthropy perspective. You wouldn't put Japan and the U.S. and all these markets together. So, unfortunately, in reality, we do focus on the geographic areas where the business is. And just back to the real question of working with small organizations. You know, again, this is the reality is it's hard to work with very, very small organizations when you're a big global foundation. And therefore you work with global partners or with other intermediaries who then, you know, will work with the smaller organizations. And that's kind of how the system works. It doesn't mean that we don't love to see a good idea that's been generated and that can be built up and that we would take that and fund it. And that does happen. But a lot of times a small activity in a small community, whether it's in the United States or another, we're just not capable of putting dollars. So we need, again, I'll go back to the point I think I made before, is we need partners. We need nonprofit, for-profit partners to implement our work.
Good. I think, I mean, this issue of partners is really important. I'm sort of a hybrid, or, you know, some people see me as an academic, others as a practitioner. But the one thing I learned is that there is plenty of research so far, especially on financial inclusion issues. And I think one of my, whoops, this is God talking to me for what I'm about to say.
Be careful.
Okay, this is, I think we need to be provocative on these issues, and I'm afraid that the foundations do emphasize the research, but we know that financial education works, helps people mobilize savings. What are you doing about that? We know that electronic payment networks work. Mobile actually is not working yet, and it's going to take a long while. You have to set infrastructure for payment networks first. We know that increasing credit and funding, financial resources also work. And we also know that there are certain barriers to entry that can be reduced by setting behavior. So, you know, on the operational side, where do you see your experience can shed some light that you can push projects in Latin America, even in your target countries, so that you can enhance financial inclusion?
Well,
it's a question.
So
maybe Janice
I'll
can
start.
handle that one.
I mean, I think we, I
I'm
wouldn't.
not trying to put down research. I just think that
No,
we
well,
can also.
Yeah, so let me both address and push back a little bit. There's a lot of research out there, and I think there's a lot of research about the problem, but I would stop short of saying we know exactly what works. Yeah. I don't know that we know what works, or else the problem would be solved. But
you don't continue doing the research.
No, but what I would say is I think we need a different kind of research, and the way we've been thinking about this is rather than certainly research is important to identifying the problem and making sure we're putting resources towards the right thing, to payment networks as opposed to payment devices that don't have a network to connect to. That would not be helpful. So research helps us with that, and some of that might be out there. But what might have been a traditional model is random control tests to really, and those take a lot of time. And a model that we're moving towards is more of rapid iteration, sort of testing and learning as we go, so that as we roll.
He's moving from his chair.
He's avoiding my response. I think is what
it was the pushback and the ball and the chair breaking down.
As we test new interventions, as we think about the role of technology, as we think about focusing on institutions, individuals, small businesses, I think we have to be evaluating as we go, and in real time, so that we're improving constantly as we go, and we're sharing those learnings more broadly. So I think your point about research is well taken, because it's easy to just stay there and never actually move on to try things and address the problem. But I would say we need a different kind of research that allows us to respond real time and adapt our programs.
Yeah,
I'm sorry. Okay, thank you. So I just want to say that I'm actually really proud about the direction that MasterCard has taken around creating this wholly owned subsidiary, the MasterCard Center for Inclusive Growth, because that really tackles your question, Manny. We focus on academic research, right? But we also have the global philanthropy team that's at the ready to really begin to implement based on that research. And so we're putting resources into really understanding the issue, but then we also are putting resources to immediately investing in a solution. And that solution is not only driven through our philanthropic efforts and our partnerships with NGOs and governments and multilateral organizations, but it's also going internally to our business partners inside MasterCard to really develop the innovative products and services. And I think that that's the model that you really need to focus on, is really being able to understand what the issues are, and as an organization, as a corporate entity itself, be prepared to bring the solution to the table.
Dennis?
Yeah, I would say on the research, I mean, we've used that term, I think, maybe interchangeably with learning, too, right? And I don't think there's too many corporate foundations that overemphasize the research. It's just not really what we do, right? If anything, it's the opposite, you know, maybe. But I think on the learning, you know, there is, we definitely have a new, you know, new energy in sharing what works. I mean, we talked about financial capability, or if you go back to the literacy or education, I mean, does that work? And we've all have projects, and we all have results, and we haven't really shared those results. So I think when we say research, a lot of times, it's really the sharing the learnings and the effectiveness of programs, so we can build, and so people know about, you know, what we see, because we do see a lot of activity, you know, so what we see, what works and what doesn't work, and that we're making that available. Sometimes you could call that research, and there's other pure research too, but I think there's both. But I don't think anyone wants to do any more needless research.
I'm happy with research. I love research. We have a few more minutes left, so I want to invite you to please ask questions. I think, you know, as people come to ask the questions, Latin America has been growing basically out of 5 major economic drivers of growth. 1 is agro-exports, 2 is tourism, 3 is migration, 4 is the energy and extraction industries, and 5 is a little bit of the light manufacturing outsourcing. The 6th one, that's mild, perhaps mostly in Brazil, is the knowledge economy. But if you look at the drivers of economic growth across Latin America on these elements, there is no correlation between growth in these segments and financial inclusion. And I think we need to pay attention to those realities. The labor force, the labor markets in all of those segments are actually pretty much excluded from the financial system, even though they are promoting economic growth in this context. We have a question over here.
Yes. Yes, my name is Paula Marshall from the Bahamas. I wanted to address this question to Monica Chavez, right? In relation to MasterCard. In the Bahamas, and I'm sure in other Caribbean countries as well, we have a large number of persons who fall into the categories that we're looking at, the marginally employed, and of course, most of them being affected, particularly after the financial crises of 2008, who are involved with the credit unions. And the credit unions have been doing a lot of work with MasterCard. So in terms of the, what you've indicated in terms of doing programs and funding programs with countries, have you been doing anything in the Bahamas? I don't know whether we are aware of the fact that MasterCard is prepared to fund or assist with programs, because we do have quite a number of programs that we're doing with those marginally employed and others in that category that you seem to want to target. But I'm not aware that you are prepared to fund these programs. So I don't know if you're able to give us a little bit more information on that in terms of even how to access this funding.
Have space for one more question. Antigua. Okay. Well, the Caribbean rules here.
Thank you very much. Almira Henry, Director of Social Policy, Antigua and Barbuda. My question is along the similar line as the Bahamas, and it goes to MasterCard specifically. I know for a fact that MasterCard, the business of MasterCard, is rife within their Antigua and Barbuda context, and I'm sure so too for the whole Caribbean. And my thinking was that, one, when you invest in the research, maybe in the Latin American context, but also if provision could be made as well to do research in identifying some of the needs that we have in the Caribbean, in the OECS. We do business with you. And as you said earlier, it may sound like a cop-out, but we want to take back something when we go back home, because we came to this meeting to develop some partnership arrangement and to know exactly if, for example, we could do bilateral projects with the whole region to get some attention with respect to this financial inclusion. So that's my input for
Thank
now.
you. Just if we can just answer briefly. Yeah.
Okay. So in terms of the questions for the programs in Bahamas, I don't know from a business perspective, and I have a couple of colleagues here, and I don't know if they have any insights into programs that we're currently doing in the Bahamas. But I don't honestly know if there's any particular programs that we're in partnership with in the market in the Bahamas. I'm happy to get your card and get back some information from you, but currently I don't believe that there's any programs that exist. But I will tell you that right now we're partnering with a number of different governments globally to really develop partnerships with those governments to create, for instance, in Nigeria, where we developed a social payments program. I'm sorry, in South Africa, we developed a social payments program with SASA, where essentially what we're doing is we're providing social identity cards to 10 million citizens in South Africa. And if you think exponentially into how that affects the families, that's about 22 million families in South Africa that are now going to be receiving their social payments through these smart cards. So this is the type of technology and innovation that we're really fostering within MasterCard with the, and we're piloting this innovation to really understand if it really works in these large markets, with the intention then to be able to work with the smaller markets and make it successful. In terms of your question, I again would be happy to exchange cards with you and find out if there's any opportunities for us to partner. As Dennis mentioned, we tend to work in the markets where there really is a very large opportunity and need. That doesn't mean that we're excluding the smaller markets. It means that as it relates to really partnering and piloting initiatives and innovations, we are working with those countries that can really foster the most opportunity and scale for the programs that we invest in.
Thank you. Janice and Dennis, you want to add something?
No, I think that says it all. Thank you.
Well, we
say that if scalability is an issue, that we have what is called CARICOM, 16 million people in the Caribbean. CARICOM is the organization that involves all of the English-speaking Caribbean and the Dominican Republic. That's 16 million people. And if you're talking, if scalability is such an important issue for you, probably one of the ways in which we can work this is on a regional basis through CARICOM, the Caribbean governments, because most of the issues are going to be similar and there can be programs that are region-wide.
Yes. Thank you very much. We need to break for lunch, but I think there are at least 3 takeaways from this conversation. I'll be short and brief. First one is that this is a subject of interest for foundations that will be prepared to work in some capacity on the issue of financial inclusion. Thank you. Second is that I think everyone in the group agrees that forging partnerships not only with non-profits but expanding the partnership with private sector and even perhaps with the public sector will be ideal for the near future. And third is that when you talk about scalability, you need to consider not only the larger countries but also consider well, countries like the Caribbean. So this is a task to consider for future opportunities. And with that, thank you very much and enjoy your lunch.